this video, I am going to teach you one of my favorite swing trading strategies. One of the reasons I love swing trading strategies is because they're kind of a buy, set, forget mentality towards things. And so therefore, you don't have to be spending a lot of time in front of the screens and stuff like that. So this is also more of a medium risk setup as opposed to like a higher risk setup like day trading and stuff like that. So to talk through this setup, I want to talk through what's on my chart to begin with. So first off, this is using the daily chart. I use this daily chart because it's a swing trading strategy and you only need to check it about once a day towards the end of the day near the market close. The indicators on my chart for this one are also very basic and very simple. That yellow line on my screen is the 5-period simple moving average. So this is looking back and making a moving average based on 5 days. The 5-period moving average, and then that red and green indicator underneath, kind of at the bottom of the chart there, that is my trailing stop indicator. And I like to have that on the screen just as a gauge of where I am on this trade. So before I dive into the rationale behind this setup, I want to be clear that this is not a setup that I invented. This is a setup that has been taught by Linda Raschke. She is an incredible trader who's been around in the market for a very, very long time and has produced some really, really trustworthy stuff for years and years. She is not a new trader. She's been trading since like the 80s. And this is a strategy and kind of a rationale that she uses. And so I want to talk about what this looks like in my own trading strategy and how you could potentially use it as well. So one of the things that you will notice as you look at more and more charts is you'll see that pretty much every single sector has a time where it's got some pretty decent momentum to the upside or to the downside at least a couple times a year. And so if you can actually take advantage of noticing when that momentum has shifted and try to get on that momentum for some quick swing trades, you'll be surprised at how often this setup presents itself when you've got a whole watch list of different sectors. And so one of the ways that Linda Raschke talks about spotting the momentum in a sector is to look at the price in relation to the 5-period simple moving average. And so one of the things that she noticed is that you can kind of predict movement to the upside by counting how many days above the 5 simple moving average price has been moving. And if you find price moving for 7 days above the 5-period simple moving average, that is a sign that it's probably going to continue in that general direction for the next week or two. And this is the same with the reverse of that as well. So if it's been trading for 7 days below the 5 simple moving average, then chances are it's going to continue to trade in the same direction for at least the next week or two. And so you're going to want to look, kind of the idea behind the setup is you're going to want to find something that is trading for 7 days above or below the 5-period simple moving average. And you're going to want to throw that on a shortened watch list and kind of keep an eye every single day from that point on what price is doing. Now, if you have followed me for long or you've watched any of our videos, you've heard me say a lot that the safest entry is going to be a dip, right? So if you're looking at a trend, the safest entry is going to be a dip down to like the trend line. The safest entry on a breakout is going to be right at the breakout. And so this is kind of more of like a momentum strategy where the trend line could be changing and stuff like that, or at least it's in a short-term trend on the daily, and you're trying to catch a dip before the next swing up. Or if it's on the downside, you're trying to catch, a green day before continuation to the downside. And so we're looking for, if it's something to the upside, we're looking for a dip. And so let me talk about what that dip looks like with a couple of examples of trades that I've actually taken, okay? The first one is over here on XLI. This is the industrial sector. And you can see back at the beginning of November, we had 7 days above the 5 simple moving average. And then we had a sell-off where we had a close below the 5 simple moving average. And the idea behind the swing trade is very simple. You just buy after a period of 7 days above the 5 simple moving average. You're just going to buy the first close below the 5 simple moving average, okay? that's your dip entry to the upside. So if you were to buy that here, and then just the idea behind it is you're going to sell the first close above the 5 simple moving average. Okay, so you can see that 1, 2, 3, 4, 5 days later, we had a nice move up above. So if our entry was here and our close was here, our exit was here, like that's a really good day. You can see the or that's really decent money in just a 5-day period of holding. You can see the same thing over here on ITA. This is the defense sector. 1, 2, 3, 4, 5, 6, 7 closes above. Big sell off. And then 4 days later, we have a close above up here. The nice thing about this is if you kind of have a sector watch list, which I've given you before, with this, you can then turn around and use leverage. So let me give you an example of this. So on the defense sector here, you've got leverage now added to this with ticker symbol DFEN. And DFEN closed below here at 35.47. And then 4 days later, it closed at 35.73. So not a huge gain, but it is a gain just a few days later where all you had to do was hold on to it until the next close above the 5 simple moving average. So if you want to add leverage now to XLI, you can go to UXI and see the chart here. And you can see the 14th over here. The close is 40.84. And then our close above is all the way at 41.28. So you've got about a $1.50 move on a $40 stock just 5 days later. And so this is something that plays out regularly with a lot of different sectors, and it's one that I wanted to draw your attention to. This regularly is something that'll net me anywhere from like 1 to 5. I've even had 8 or 9% on these. Because you're kind of catching the momentum. You're playing a dip on the direction of the momentum, which is increasing your potential profits by buying a dip, and it's also decreasing your risk at the same time. So let me talk for just a minute about stop losses and how those work on this trade. So what you're going to be looking for is kind of one of 3 stop loss scenarios on this setup. The first is going to be a daily close below this Trash Panda trailing stop indicator on the daily chart. That is going to be my first sign that this trade's not going to work out in my direction. So there's your first exit scenario that is not profitable. Your second stop loss scenario is going to be 7 days below the 5 SMA. So if you close 7 days below the 5 SMA, now momentum has shifted in the other direction. And so because of that, you're going to want to go ahead and take your loss and exit. And then a final stop loss would be roughly about 4%. If you get to the point where you're at about a 4% loss on a leveraged ETF, that's also going to be kind of an exit scenario for me, because if I know that my average win is going to be anywhere from 1 to like 8%, I want to make sure that I'm trying to keep as good of a risk reward ratio as possible. The great thing about this setup is that the win rate is pretty stellar on it over the long run. And so sure, there will be periods where the win rate's not as good, but the win rate on this setup over the long run is pretty great. And so therefore the risk reward is important, but not maybe as important as it would be on other setups, because overall your profit factor is still going to be great if your win rate's great. So anyway, wanted to give this trading setup to you. I hope it's helpful for you. This is a great way to make money swing trading with kind of a buy set forget mentality.